Then Vice President Equity Technical Research, Wealth Management at Motilal Oswal joining in the show right now. Ruchit, hi, afternoon. Great to have you on the show. Ruchit, I mean, literally the question is about IT and how much more of a price correction before you think some stability would return in?
Yeah, hi, very good afternoon. Well, kind of down move that we have seen in last couple of weeks, this clearly indicates lack of buying interest over even at current levels in the IT names. So I think before we see any kind of turnaround after this price-wise correction, we are likely to see some time-wise correction as well, where the IT stocks or the index itself would consolidate within a range before turning up. So I think one should not be in a hurry to do any kind of bottom fishing at current levels. Maybe price-wise, we would not see any no major damage or big damage from current levels, but certainly a time-wise correction could be there going ahead.
Okay, Ruchit, what's the resistance at this point with regard to the index, and how possible is it that we are exposed to more downsides than upsides from here, in your opinion, at least on the Nifty, if you can give us a sense?
So it seems that markets are going through more of a consolidation phase rather than any kind of downtrend or any kind of major uptrend phase. We witnessed a resistance around the 26,000 mark during last week. The index was unable to surpass that 26,000 mark. On the other side, if you see on the downside, this 25,400, 25,200 is that gap area which was created on the day when the India-US trade deal was announced. Also, the 200 DMA comes in this range itself. So 26,000 to 25,200 broadly, I think we are trading within this range only, where any up moves towards the resistances are witnessing selling pressure, and down moves are likely to witness buying interest when 25,400 200 in that range. So on the index front, we still believe that markets will see some consolidation. Yes, it's more of a sectoral move or stock specific moves which would dominate in the short term.
Okay, let's welcome on board Nitin as well and find out what his advice is in the market right now. Nitin, the same question to you. Afternoon, firstly, how much more of a derating in IT before any stability comes in?
Look, I think our own view is that we are now sort of moving to the other end of the pendulum. So there is just too much of fear and apprehension around what AI is going to do to IT. Some bit of it is real, surely, but a lot of it is really going to be happening over a period of time and not show up tomorrow, day after. In the meantime, these are companies who have very strong cash flows. They're trading at good dividend yields, cash flow yields. Question is, will they continue doing what they were doing earlier, which is, earlier there was buyback, or now, paying out dividends, or are they going to start putting some of this cash to better use? I think I would be surprised if after the past few years, 1 year of experience, I don't see, we just heard the largest IT company talk about setting up data centers and so on and so forth. So I would be surprised if I don't see a lot of them start telling us about what they are going to do in AI. And this could, all over the world, we are seeing this sell-off in software and IT. This could also present great acquisition opportunities for some of these companies. So I do believe that in the short term, I think we have sort of, sold off quite a bit, and you could see some amount of bounce back happening. Over the long term, surely the growth rates of these companies do come into question if they don't change their business model.
Indeed, a testing time, but now, and of course, the one space which is really getting battered down is the entire capital market space. And given that India has now put further curbs on loans to brokers in a threat to trading volumes within the F&O pool, that's clearly what's not auguring well for some of the capital market plays. And this, remember, in addition to the STT hike that we heard about in the budget. Just wanted to get your sense, Nitin, on the capital market plays and whether this further dampens volumes too.
Well, I mean, clearly, the government has very clearly put out that they're not very happy with the kind of exuberance that they see in the futures and options space, and all measures towards sort of bringing them down are happening. So whether in terms of curbs on lending and also on margin funding and so on and so forth. So I think you will see that happen. You will see things settle down out there. But longer term, I think this whole space, the way it is structured, if you look at Indians, we are just around 6 to 7% of our household assets comprise equities. So I think we have a long way to go when we even compare ourselves with our emerging market peers, whether it's China, Korea, Taiwan, or across. So I think, and plus my own belief is that the power of equity compounding that people have seen in the last few years, especially post COVID, I don't think people are going away from the equity market. So structurally, we believe that yes, you will see a little bit of cooling down of volumes, and some parts of the capital market space will see volume cool down happen. But there will be others who will continue to benefit. For example, I don't see AMC is getting impacted dramatically. I think you will continue to see that. Even some of the broking space, you will see a cooling down initially, and then things pick up once more. So overall, I think we are very, very optimistic on the capital market space. We believe it's a structural story, and that structural story will continue.
Would you play it, Nitin? Would you suggest you play it through the exchanges just because of the fact that it's a duopoly? Would you play it through the brokerages? How best would you suggest one plays that theme, given the risk reward at this point?
So we like the asset managers and the wealth managers. I think that's a space. I think the exchanges are natural monopolies in any segment that they gain. You will see one exchange is strong in equities. You'll see another F&O, and the other exchange is strong in currency, commodity. So once the valuations settle down, and I think don't forget you have the largest exchange IPO down the corner, and so the premium some of these exchanges enjoyed because of scarcity will also come down. So once that settles down, I think the exchanges are also a good space to look at.
Okay, makes sense. For now, of course, the metal trade is...
This theme at all, this entire theme of GLP-1 likely to, of course, become a larger theme, hopefully, in FY27, given the fact that there's going to be patent expiry there?
Well, sure, why not? I mean, I think if the valuations do stack up well, pharma is a sector which has suffered in the last 1 year, has been an underperformer. And you would see a few of these companies, generate very strong cash flows, especially, if the GLP-1 theme starts playing out.
Okay. On charts, any of these looking interesting? I wonder, Ruchit, with regard to some of the pharma names which are buzzing in trade today.
If you look at the recent price action, I think Torrent Pharma has been one of the stocks which has shown a good relative outperformance within the entire pharma basket. While last 5-6 months, the pharma space has not given any kind of positive returns. Torrent Pharma has relatively held well, trading around its 52-week high. Today we can see that post the numbers, the follow-up move is very strong with good volumes. So I think if very selective within the pharma names because of its underperformance recently, but I have to pick any, then Torrent Pharma looks good on charts.
Okay, Torrent Pharma. Also, what's the call with regard to Angel One, Ruchit? That stock is down 5%. I know I took a call from Kunal with regard to BSE, but what about Angel One?
So if you look at last 2 to 3 months, the stock has traded within a range of 2250 to 2850. Any kind of pullback moves towards that 2800, 2850, the stock is not able to take out that hurdle. Whereas, any declines towards 2300, 2250 are getting bought into. So in spite of today's gap down move, the stock still continues to consolidate within this broad range. So if we get any further follow-up selling, if the stock comes near 2300 kind of levels, then the risk reward ratio could become favorable to take some counter trades over there. But at current levels, I think the risk reward ratio is not favorable in taking any kind of fresh trade.
Okay, that's the take coming in right now on the capital.
Some of these PSU counters are looking interesting. The Nifty PSU Bank, of course, touching a record high as we speak. And, from the lows of the day, we've done very well. Now, whether it's Nifty PSU Bank, whether it is the Nifty Mid Cap Index, whether it is the Nifty IT Index, whether it's the Nifty Banking Index, all of them from the lows of the day have seen a very nice recovery. So So that is one. But outside of that, and I'll come to that, Kunal, in just a bit. I want your view on that as well. But with regard to these two counters in particular, a Power Grid and a Coal India, sitting right up on top of that Nifty basket and making some very nice gains. Talk to us about sustainability of this and what are the levels that you look out for these two, if at all they are picks?
No, I think Power Grid is exceptional because the stock is considered to be a very low beta stock. And look at the last, I think 1 month post results. I remember, I think the stock, which was almost at 250 levels, 240, 250 kind of a zone, just a day or a couple of days prior to the result. And post that, we've seen a phenomenal up move. So I remember, I think 3 consecutive days where the stock moved from 250 levels to almost 275, 280 zone. And then the next 1 or 2 weeks, the stock has moved from those 280 levels to now touching the 300 mark. So it's been an exceptional move for Power Grid in the last, say, 1 month broadly, or less than that. And this indicates that we're looking at a big turnaround of sorts for the stock. Add to the fact, Coal India, I'll probably add maybe a few other names on the PSU side, NTPC, ONGC, etc. All of these stocks are showing a very synchronized kind of a breakout for themselves. And in fact, the PSU index, the Nifty PSC index, is I think about a couple of percentage points away from maybe a 52-week high for itself. So that itself indicates that there are so many PSU names which are not just showing signs of a change in terms of beta, but there's been significant buying volume pattern for these stocks and an extremely strong price move, which is taking this move strongly forward. So I would believe that we are looking at not just a normal short-term breakout, but more of a positional and a medium-term breakout for these names.
Yeah, look at NTPC, look at Coal India, some very solid strength that you are seeing in both these names. Ruchit, anything that you're liking within the PSU pack, ex-banks?
Yes, the index has itself been outperforming. We can clearly see leadership coming in from heavyweights such as SBI. But a good follow-up move can be seen in stocks such as Union Bank and Bank of India as well. The structure remains quite bullish in all the 3 names. SBI, Bank of India, Union Bank, where the high top, high bottom structure is there. Any kind of minor declines that are coming even towards that 20 DMA support are getting bought into. So I think the sector as a whole could continue its relative outperformance.
Very interesting. Okay. And Ruchit, if I were to quickly take your call with regard to an HDFC Bank in particular, the kind of move we've seen today, how sustainable and what are levels you're looking at?
So I think follow-up move would be more important. Relatively, if you look at HDFC Bank, it has not shown that kind of outperformance in the recent past. It's just that the stock was trading around that support of 900 mark and hence pullback move has been seen. But whether we see any kind of good volume-based up move that needs to be seen, on the high side, 940, 950 remains a crucial resistance. Still, the stock is trading above, below all its important averages, whether it be 20 DEMA or 50 and 100 DEMA. So until we see any kind of trend reversal signs, I would take this as just a pullback move.
Well, that's the case right now for some of the banking names. Power Grid, Coal India, Axis, Adani Enterprises and HDFC Bank have got to be the strongest names today. Other than that, of course, there's ONGC as well, which